Good morning, traders. Good morning, good morning. Depending on where you're watching from, it will be in the afternoon, it will be in the evening. Welcome to today's live synthetic trading section with Vetexx. So today we are going to be analyzing the synthetic market using pure technical analysis and check what the market has for us today. And this is your first time of coming across this channel. My name is Vetexx, and what I do on this channel is that every day from 6 a.m. to 7 a.m. I analyze the synthetic market using pure price action and technical analysis. Okay, so if this is your first time of watching this of coming across our channel, do well to like this video and subscribe to this channel if you are getting values, and most importantly, join our Telegram channel where we post all the updates from everything we do on this channel to the Telegram channel, such as trade setup, trade entry, trade execution, and other psychological uh, tips that we share there. So do well to do all of that as we proceed to the chart, and then we analyze the market together, learn how I trade. All right, you can replicate the same thing using any trading model you use, and you'll get a better result. Okay, so what I'm going to do right now is share my screen with you, then you see how I trade, and then let's check out what the market has for us today. Let's go. So every day on this channel, we have about 14 pairs we normally analyze, which is starting from this volatility indices and step indices. Currently, we don't and now analyze the jump indices and the boom and crash indices. Okay, so just focusing on volatility index and then the jump volatility indices and then the step indices. So that is what we focus on right now. Okay, so moving on, we are going to be first of all, the trading model we use on this, we trade basically on this channel is the advanced market structure, other call is the algo market structure. So we basically do top-down analysis from the higher time frame down to the lower time frame. Okay, we know where price is coming from, where price is going to. Then we scale to the lower time frame and then we execute our trade. So that's what I'm basically going to be doing now. I will show you how the trading model look like, what we look out for, and what we do with it. Okay, so let me quickly run through it because every day I make sure I run through it for people that are coming across this channel for the first time. I run through it every day. Then from there, you get a clearer picture of what we are going to be doing, so you can also follow up with it. Okay, so let me quickly run through it and then show you. Okay, first of all, we have price creating higher high, higher low, higher high, higher low. So first of all, we have one higher high like this, and then you see price breaking it down. Okay, when price break it down like this, we consider this high as our liquidity. Now this liquidity is called transactional liquidity used for correction. Now we're anticipating price to sweep it, okay, to the upside. Now price will sweep it to the upside. Now once price sweep this to the upside, this becomes what? Sweep of liquidity. And this high here becomes our protected high. Now we're anticipating price to break this low. Once price break this low, which is the first rule now is we must have a sweep of liquidity. The second row, price must take out the newly created low to give us what? Our first break of structure, which is going to be like this. Right now, price has given us our first break of structure, which is this sweep of liquidity, protected high, first break of structure. Now, price need to retrace 50% to give us what? Structural liquidity. Now, this is what price do, give us structural liquidity. Now, price need to break this newly created low to give us what? Our second break of structure. Okay, and now once price gives us a second break of structure, this high here becomes what? Structural liquidity used for what? Continuation. So the rules are we must have two liquidity, right? Both of the liquidity must be sweep. Then we must have two break of structure, alright? This is liquidity one. Now this is become liquidity two. This is break of structure one. This become break of structure two. So we have break of structure two like this. Okay. Then what do we do next? Like I said, the both liquidity must be swept. This liquidity was first swept to give us this protected high. This second one too must be swept so that price will continue to the opposite direction. Now this has been swept, and then price tap into this point of interest and continue to the opposite direction. Okay, and this is what happens every day. This is number one, sweep of liquidity. Number two, first break of structure. Number three, structural liquidity. Number four, we have our second break of structure. This zone now is our what? Point of interest. Then we have our protected high, which is there. Okay, and this is what to do every day. So if on a normal day, once price tap into our point of interest, we hold the trade. This low is our full take profit level. Okay, so this is basically how we trade is every day. So this is the system we trade. Okay, so once you are doing your top down analysis now, uh, you look out for this structure on the 24-hour time frame, right, or on the weekly time frame. Look out for this structure on the 24-hour time frame or the weekly time frame. Then you scale down to the 4-hour time frame. Once you scale down to the 4-hour time frame and you spot this setup again, this is one thing that you do. You first of all go to the 15 minutes time frame after spotting this on the 4-hour time frame, right? Then you anticipate the continuation. You don't enter the trade on the 4-hour time frame or the daily time frame. Once you see your continuation on the weekly or the daily time frame, you have to wait for continuation on the 4-hour time frame first. And then when you see this structure on the 4-hour time frame, you can then go to your 15 minutes and then anticipate a continuation like this. Alright, you anticipate a structure like this, then price and then start selling in the opposite direction. So this is what to anticipate on the 15 minutes. Okay, now the higher time frame gives you direction. The lower time frame tells you where the price is going to. Right. So this is the bigger picture. Now on the let's say you have this on the take for example, this is the daily time frame structure. Now you know your price is coming from here and price is going here. Okay. You scale down to the 4-hour time frame. You see this structure on the 4-hour time frame again. Once you see this on the 4-hour time frame, you then scale to the 15 minutes time frame to spot this continuation like this before you can start selling to the opposite spot direction. Okay. So that is basically what we do. That is the system. That's what we do every day. All right. So I believe this is clear enough. This is the advanced market structure or the algo market structure. So this is what we do every blessed day. Okay. This is what we do and this is what we look at for every day. So if this is what you also want to, this is what, just pay close attention to when I'm doing my analysis and then you grab a lot of information from it. Okay. Now let's move to the first trade for today. Let's see what we have. Okay. Let's see the first trade on our watch list and let's see. So first of all, we have V25 1S. We have V25 1S. Okay. Now starting from the daily time frame, V25 1S is bearish. Okay, it's very bearish on the daily time frame. So we are anticipating a sell on the daily time frame, but price has not gotten there yet. So this is what we have on the daily time frame. We have this shape of liquidity, which is here. If you can see clearly, I have this shape of liquidity on the daily time frame. You have this protected high. You have, sorry, very big of structure. The price retrace to give us our structural liquidity. We have this. You have this second break. This is our protected low. So this one now becomes what? Point of interest. This is our point of what? This is our point of interest. Okay. Now, what does price have to do? Price will need to come into this zone, come into this zone like this, and give us a continuation on the 4-hour time frame, which is going to look something like this. Mhm. And then we'll scale down to the 15 minutes time frame and anticipate a continuation like this. Look on the 24-hour time frame, one price tap into our zone, anticipate a continuation on the 4-hour time frame, a continuation structure. Once price gives us a continuation structure on the 4-hour time frame, then we scale to the 15 minutes time frame or 30 minutes time frame to look at for another continuation before we can start executing. Okay, so this is basically the whole system. This is how we do it basically. Okay, this is how we do it basically. So this is going to be, you have this for, you have this at 24-hour or the weekly. Now this POI is going to be on the 4-hour or 1 hour. This is, and this time frame is going to be 30. So this is it. This is just the whole picture. Okay, you don't, once you put it on the 24-hour or weekly, you find a continuation on 4-hour, 1 hour, then go to the 15 minutes. So I think this is the most easiest explanation I will give on this. Okay, so if you don't understand this again, there is nothing that you can that you can understand. So it's quite simple. Okay, it's quite simple. You just take your time and then just do something with it. Okay, it's not that difficult. Right, so I believe you understand this. I'm trying to take my time to make you follow what I'm doing. So now let's just go to Let's now that we have a 24-hour PR, let's check first if there's any 1 hour point of interest at the moment. Then we can do something with it. Okay, so this is what we have, the 24-hour. Let's check the 4 hour time frame. If you can find a recent point of interest on the 24-hour time frame, there's a point of interest. We have about 4 points of interest right now, but let's continue from the recent point of interest. At this point, yes, let's work with the recent GOI that we have at this point. Now you can see that first of all we have our what shape of liquidity here. It's our shape of liquidity. Secondly, we have what first break of structure, which is this. That price retrace 50% to give us our structural liquidity, which is rule number 3. Then we have a second break of structure here. This becomes our protected low. Okay. Then the whole of this zone is what? Our point of interest. See that price has already tapped into this point of interest and it's trying to continue now move to the opposite direction. Okay. So what do we do now? Let's get to the 15 minutes time frame and see if we are going to start looking for our continuation setup. Let's check this. So currently we don't have anything on this pair at the moment. Don't have anything on this pair at the moment. So we will sit on our hands. Let's see what is going to happen next. Okay. Let's see until price give us a clear structure, then we can start taking trades on it. But for now, I think it's better to sit on our hands because there's nothing on the chart. Okay. So let's check the next pair, which is V100. V100 is bearish on the weekly, bearish on the 24-hour. So we have price tapping into our 24-hour zone already. Okay, so I've already marked this down since for a very long time. We have our rule number 1, sweep of liquidity. Rule number 2, first break of structure. Rule number 3, structural liquidity. Rule number 4, our second break of structure. Now this is our point of interest. And what do I say to do when price tap into a 4-hour point of interest? It will give you a 4-hour continuation or a 1 hour continuation. And then after that, you scale down to the 15 minutes or 30 minutes, then you can start executing the trade. This point is your starting point, and this is your what? Finish point. This is your starting point, this is your finish point. I'm going to be checking the next pair. which is VTNS. Let's check VTNS. Okay, we marked VTNS yesterday also because it's bearish on the weekly time frame. Sorry, it's bullish on the weekly time frame and also bullish on the daily time frame. It gives us a continuation on the 1 hour. So let's check if it gives us a continuation on the 50 because I already marked it down. You can see sweep of liquidity, structural liquidity, first break of structure here. Then we have our second break of structure here. Point price has already tapped into the point of interest, and then this is the starting point. This is going to be the finish point. So let me go to the 15 minutes time frame. If I'm going to find our system, once I spot this system, then I can start selling. Or let's see. I think I can spot something here. Let me check it clearly. This is going to be worth taking. Okay, this is not bad actually. I don't know if you all can see, but I'm going to check if there's something I need to look at for you again. Okay, this is the structure that we can take. But I want price to at least come up a bit so that the profit will be something better. If price doesn't give up to 1 to 4 risk to reward on this, I will not be interested in taking the trade. So I'll just wait and see. Okay, this setup is not yet something I can send. This is actually a valid setup that is trying to form. It's a very good trade. But then we are going to wait. We cannot just take 1 to 1 RR trade. At least you give us up to 1 to 4, 1 to 5 RR. Then we can take it. So I'll definitely come back to this. If this is trade that we are going to be taking, okay. If we are going to be taking this trade, I'll be sharing the setup in the community. So stay active. If you are watching this live session for the first time, join the Telegram community. Very important. And then to trace the derived synthetic indices. Okay, because those volatility indices and the step indices, they are all commodity that is on the Deriv synthetic Deriv broker, which is synthetic indices. So register using the link in the description of this video, and then fund your account so you can be able to take trade live with us. So the next we are going to be checking now is V75 index. V75 index. So we have V75. We have this on V75. I already marked the 4-hour time frame PY. We are anticipating. Okay. So, but if you check the 24-hour time frame, this is what we have on the 24-hour. 24-hour is already bearish, and so I just have to scale down to the 4-hour and mark our continuation because the 24-hour is just 24-hour and weekly. They are just for direction. They tell you where the price is going to and where it's coming from. So your one is to scale to the hourly time frame. Because these are the one we use for execution. Once you get their own structure on the hourly time, you scale down to the minute. Then you start uh, looking for your entry. Now this is the starting point. This is the finish point. So that was why I scaled to the 4-hour time frame. And once I scaled to the 4-hour time frame, I saw my marks up there. So all I have to do is just for me to mark it out. This is our sweep. This is our first break. It's our first break, and this here is our second break. Okay. Now, once price tap into this point of interest in the 4-hour time frame, we then anticipate sell to the opposite direction until price take out this 4-hour low, which is this. Remember, not until price take out the 24-hour low, until price take out the 4-hour low. The only time you start taking trade on this V75 is when price take out the 24-hour low. That is when you stop looking for continuation on the 4-hour or the 1 hour. So you wait for another 4-hour structure to form before you can start taking more trade on it. I hope that is clear enough. Now let's check out the next pair, which is V100S. V100S has been bullish on the daily, bullish on the bullish on the weekly, bullish on the daily. Okay, so this is what we have on V100. The continuation structure. I already marked it yesterday, and if you look closely, it's the same thing I've been saying. I'm still saying. Okay, first break of structure, then we have our second break of structure here. It's basically simple. So this is me trading professionally. Okay, you don't just force. Once you see it, you can never unsee it. Okay, it's very clear now. Once you spot it, you can never unspot it. Okay, so this is 4-hour time. This is 1 hour time frame. So what do we anticipate? Price tap into this 1 hour time frame. You scale to the 15 minutes time frame and start looking for sales. Sorry, and start looking for buy to the opposite direction. This is gone PI. Price will start selling. So it's just quite simple. Okay, just have to be patient and wait for your edge to play out. There's nothing. There's no put this here. Price come here. Give you confirmation. You buy to the opposite direction. So it's just something that is not difficult. Okay, just take your time and study. Now the next pair we are going to be checking because there's nothing on V100 right now is V50. Let's check out V50. V50 is bearish on the 24-hour time frame. See, it's about smashing the TP. So even if you smash the target, we still don't care. Okay. The only thing is that the 24-hour direction is done. Okay. Now this is where it's selling from. This is where it's selling from. Okay. This is where it's selling from. This is the starting point, and then this here is the finish point. And so the price is almost at the finish point. It's almost at the finish point. But then let's go to the 4-hour time frame. If you are going to see any recent price action that we can hold on to. Okay, you can see we have 4-hour time frame structure here. So we're anticipating price to just turn back and come to this zone. So this is our first break. We already have our super liquidity, structural liquidity. We have our second break here. And this zone is what? Our point of interest. So this is our point of interest. So what do we do next? We anticipate price to come into this zone. Give us continuation on the lower time frame and we'll sell until price take out this below here. Okay, that is what we are anticipating currently on this pair. Alright, so let's check out the next one, which is step 300. So the whole thing basically is revolve around you doing your top-down analysis. Okay, the top-down analysis is key. And they always say you always analyze your pair from the lower time frame or to the higher time frame. Okay, That's what it's about. It's not something that is. It gives you direction. Once you know the direction where your price is going to, and you know the direction where price is coming to, we don't have a lot of issue panicking about uh, missing trade and all of those things, because the whole thing is going to be basically clear to you. Okay, so most of the time you might not see what you are looking for, but it's worth waiting for. Okay, you might not see what you are looking for, but the fact that you wait for it, okay, what you are looking for is definitely going to show up. So there's no need to be in a hurry. Okay, so this is the weekly time frame is bearish, daily is bearish. Then we have a continuation right here. The 4 hour time frame, we have a continuation that we are anticipating, which is this. We want price to tap into this zone. We have our sweep, we have our first break of structure, which is this. We have our protected high, and we have our second break of structure, which is this. Now this zone becomes what? Point of interest. Okay, that zone becomes our point of interest. Now this is what we are going to be having. Alright, price to tap into this zone, and then give us continuation on the 15 minute time frame. Then we can start taking trade to the opposite what direction. So this is what we anticipate. Okay, hopefully this happens. Okay, because I really can't wait. So this is what we're anticipating. Okay, so once this happens, we have a very good confidence and we have a very high probability setup. We can always anticipate it. Okay, so let's check out the next pair on our list, which is step 200. Let's say step 200 want to do the Lord's work. Okay, we already have our setup marked down already. Okay, on step 200 is bearish on all time frame. So we have on the 1 hour time frame is also bearish. We already mark our setup down. Number one, we have our sweep. Number two, we have structural liquidity. First break of structure. Number three, we have our structural liquidity. Number four, we have second break of structure, which is this, and then we have all of this. So price need to come to this zone. This is the 4 hour time frame. Let's check for something. Mhm. Price need to come to this zone. Let me check the 20 minutes. Okay. If price come to this zone and it doesn't hold, okay, you anticipate price to come to this zone because we have a very clear structure here. So this is a 4 hour POI. So price need to come to this zone and give us continuation until it take out this target. And if it doesn't and it respects this 1 hour POI, we will stick to this 1 hour POI. Okay, this there's a 4 hour POI above, and then there's a 1 hour POI below. So we wait for either of them. The one that respects first, we are going to start taking trade on it. Alright. So that is what we have on step 200. On the next pair, we have V51S. Like I always said, V51S just smashes target on the weekly time frame and also on the daily time frame. So we are anticipating a continuation on the 4 hour time frame. So this is a buy continuation. We have sweep here. We have our first break, which is here. Price retrace 50% to give us what structural liquidity, which is this, and then it break the newly created high to give us our about 8-second break of structure, and this is our POI. So price has tapped into the POI. Okay, so we want price to come a little bit inside the POI with something like this more, then we can start looking for sales until price take out this target. So this is what you're anticipating on V51. Okay, let's check the next pair, which is step 100. So step 100 is actually bearish on the 24-hour time frame, bearish on the weekly, almost all the time frame is bearish, and then it gives us this 1 hour continuation. Okay, give us this 1 hour continuation. So we are going to be anticipating price to tap into this POI, give us a continuation structure on the 1 hour, then sell to the opposite direction. So this is what we have. We have our sweep, we have our first break of structure, we have our structural liquidity, then we have what? Second break of structure. And this becomes our what? Point of interest. Okay, so once price tap into this zone, it will give us continuation on the lower time frame. Then we can start taking. The reason why I always take continuation on the lower time frame, because one thing with this angle structure, the advanced market structure, is that it's all about taking continuation. Okay, it's catching continuation. You don't just enter trade like that without having multiple confirmation. Okay, you need to protect your capital. And then there's one thing to enter a trade, and then it's one thing to hold a trade to the target. A lot of people enter trade, but they don't go trade to the target. They just waste the trade in that sense. And one psychological thing that I've battled with over time is the fact that I know how to trade, I know how to enter trade, and then the other side of it is that holding trade. Okay, your risk to reward you always trade is maybe like 1 to 4, 1 to 3, but then you keep closing trade at 1 to 1, 1 to 2, and then when the losses time come, you won't be able to survive it. So if you're watching this right now, whenever you see a trade, always trust your analysis and then be able to hold your trade to its targets. That is going to help a lot in your trading. Okay. So I'm going to be so this is what to anticipate on step 100. So the next pair we are going to be checking is V15 index. Let's check out V15 index. V15 index has really been bearish. Has been bearish for a long time. Okay. So on the daily time frame is bearish, no structure. Weekly is bearish, no structure, but on the 1 hour time frame is bearish, but it gives us a continuation here. Okay, which this is the continuation we have. All right. We have our sweep here. First break of structural liquidity. Second break of structure, POI. So price will be anticipated to tap into this zone and start selling to the opposite direction. But if it doesn't, we have a 4 hour POI above. If it doesn't respect this point of interest, we have this that it should come to. The price doesn't come here, you anticipate price to come to this zone and sell to the opposite direction. So one of these two, we to respect one of the point of interest. So until then, we'll be sitting on our hands and then we waiting for the perfect moment, the perfect trade to show up. Okay. And next we have V25. V25 is bearish on the weekly time frame, and then we have a bullish structure on the daily time frame, which is this. Number one, super liquidity. Number two, we have break of structure. Number three, we have structural liquidity. Number four, we have second break of structure. This is our protected high. And this is our point of interest. So price is going to start selling from here. This is the finish point. So once price tap into this point of interest, it's going to give a 4 hour continuation until it take us the target. It's going to give us the power continuation. Then from there we can scale to the 15 minutes, 10 minutes, 30 minutes to start selling until price take us this target. Okay. So now let's check the next pair, which is step 500. What do you have on step 500? Step 500 on the weekly time frame is bearish. On the 24-hour time frame too is bearish. So let's check the 4 hour time frame and see if you're going to find anything good. So if you don't see anything on the 4 hour time frame, we are going to be sitting on our hands. Oops. We currently do not have anything on this unless we have this 24-hour time frame structure that is forming. And so we will anticipate the price to come down. This is our, let me quickly mark them out. So this is what we are anticipating the price to come to at this point on the 24-hour time frame. There was a time where this the 500 was selling and gives a lot of re-entry, but there are a lot we didn't take advantage of. And now we don't have anything else. This the 500 except this. Okay. So until price does this, come into this zone, and then give us continuation on the 4 hour time frame before we can start taking trade on the 15 minute time frame. So this is it. This is what we are going to be anticipating, right? So we anticipate price to do this, and then we can start selling. Tap into the 4 hour, 24 hour, do this, and then give us this. Then this is going to be the starting point, and is going to be this zone is going to be the finish point. Okay, the starting point and the finish point. Now let's check the next pair. It should be 30s. B30s on the daily time frame. We've already marked the setup down since for like some days now, and then we are anticipating a continuation on the 4 hour or the 1 hour. So this is our sweep of liquidity. This here is our first break of structure. This is our structural liquidity, and then this is our what? This is our second break of structure. Okay, and this is the 24-hour time frame. Now let's go to the 4 hour time frame. Clearly, you can see that we don't have anything on the 24-hour time frame. So let's check the 1 hour and see 1 hour time frame. Even on the 1 hour, we don't still have anything. So what we are going to be doing is we are going to be watching out for V30s and see if it's going to give us a continuation anytime soon. So once price does that, we have something to hold on to. But if it doesn't, we are going to be sitting on our hands and then we watch until it comes up, something comes up. So that is basically what we are going to be doing. Until that happens, we'll be on the lookout to sit on our hands and then watch out for V30s. So if you are watching this video on replay, okay, all you have to do is try to subscribe, and then if you are getting values from this live session, and don't forget to join our Telegram channel so that whenever we are going live, you'll be the first to get notification that we are about to go live. So you can come, you watch how I trade, and you learn how to do technical analysis. If you're having issue with your trading system, and pick one or two to apply to what you are doing currently. Okay, so for V31s, we don't have anything tangible on V31s. We are going to be checking the next pair, which is V91s. So on V91s, price was bearish on the 24-hour time frame. Let's check if it has taken out the target. Okay, it hasn't taken out the target yet. So let's quickly mark it and let's see. So first of all, we have what our sweep here. Before you analyze any pair, okay, let me break this down for you. No matter the strategy you are taking, you are trading, whether SMC, support resistance, uh, ICT, like different type of trading strategy. I don't know the one you trade basically, but whenever you want to do your analysis using your trading system, always start from the higher time frame. Check out the directional bias. Where is this price coming from on the 24-hour time frame, on the weekly time frame, or the monthly time frame? Where is it coming from, and where is it going to? So after you've gotten that direction, you scale down to your 4 hour time frame and your 1 hour time frame. If your system allows you to execute on the 4 hour time frame, the 1 hour time frame, you can execute at that time frame. If price has already coming from 24 hour, but if it doesn't, you go to the 4 hour time frame, you wait for price to start moving from somewhere, okay, on the 4 hour time frame, the 1 hour time frame. Then you can scale to the lower time frame and then take your trade. Okay. You don't need to be doing sell to buy or buy to sell. Follow the trend. If the trend is bearish, keep selling until it changes direction. If the trend is bullish, keep being bullish until price changes direction. So that way you don't start having this analysis paralysis whereby one is telling you to sell, another one is telling you to buy. You want to buy to sell, you want to sell to buy, and you keep creating losses back to back. So do always do top down analysis. Every strategy has a way of doing their own top down analysis. So if you have been on this live session, if you have been following up, you see that using the same approach I use on my trading system, if you apply that to your own trading system, you see stuff more clear, and then you begin to trade quality trade over quantity. Okay, in a week you might just see 2 to 4 good setup, or some week you might not even see at all. But whenever you see those setup, you begin to win. So it's better to win 2 high quality trade or 3 high quality trade and taking 10 quantity of trade and winning just one. So I believe you get one or two from what I just said. So now I'm going to be marking V90S, and then let's see where the price is coming from and where it's going to. If it has been respecting our system, let's see. So I'm going to mark this out. So this first of all is this our sweep. Okay. Then we have our protected high. Secondly, we have first break of structure. Price retreats 50% to give us our structural liquidity. And then we have a second break of structure. Now the end of this zone becomes what? A point of interest. What does price do? Price tap into it and then start moving to the opposite direction. Remember, this is our starting point, and this right here, this is our finish point. This is our starting point, this is our finish point. Okay. Now you can see that price start moving from this zone, and now it's almost at the finish point. Okay, it's almost at the finish point. So initially, like I said, whenever you see your setup on the your directional bias on the 24-hour weekly, let's go to the 4 hour. If you come to the 4 hour, you see that we have a structure on the 4 hour here. Now in this 4 hour, there are series of continuation on the 15 minutes, 30 minutes. Same thing happen here. This is 4 hour. Let's get to the 15 minutes. There are series of 15 minutes and 30 minutes until price take out the target. So that is basically. So let's see again if you are going to see any setup you can be anticipating price to come back to. So currently we do not have anything on the 4 hour time frame. Let's check the 1 hour time frame and see. In the 1 hour time frame, we have something forming. Okay, if something has already formed, which is this. First of all, we have our sweep. First break of structure, which is this. We have our rule number 3. This is our protected high. Then this is our what? Point of interest. So we're anticipating price to tap into this zone. Give us continuation of the lower time frame until this target is taken out. This 1 hour target, which is here. So this is going to be our starting point, and this low is going to be our finish point. So we are anticipating this for now. We are going to start anticipating this. So if what you are anticipating happen, then you can start looking for continuation. All right. So that is what we have on V90S. Remember, it's selling from the 4 hour time frame, on the 24-hour time frame, and then we have to go to the hourly time frame and look for our structure, and then from there we can go to the 50 minutes, 30 minutes for our setup. So this is the target we are anticipating on this 1 hour. Now this is the overall target on the 24 hour. This last line here. Let's check out the next pair. V75 starting from the 24-hour time frame. Starting from the 24-hour time frame, V75 is bearish, very, very bearish. Let's check the 4-hour time frame. In the 4-hour time frame is still bearish. Let's check the 1 hour. The 1 hour time frame is the last time frame we are going to be checking. Once you don't see anything on the 1 hour, we are done with that pair. Okay. There's nothing on the 1 hour. So if you see you don't have anything on the 1 hour, let's check out the next pair, which is the 400. Step 400 is bearish on the weekly, but it's trying to change trend. Okay, it's trying to change trend. Well, we'll just wait, watch, and see what it's going to do. Right, we are not going to be doing anything currently. We'll all watch and see what it's going to do because the move is still very, very long. So currently we don't have anything on step 400. Right, so we've finalized most of all the pair, and then we only anticipating something on V tennis. This V tennis. Okay, let's watch it if it's going to give us what we're anticipating. But if it doesn't, I don't think we'll be interested in anything on this V tennis yet. So let's watch out for this structure. So we want to be anticipating something like this. This one that's coming here to just give us something like this. Okay, you can see it clearly on the 15 minutes. So volatility 10S indices, synthetic indices. We have this. We're going to be anticipating this. But we want it to push up a little bit. To push up, then we can start waiting for it to come down. So when it comes down, we can buy to the upside. So I will update every one of you in the community. So if you're here to join the community, the link to join the community is in the description of this video. Okay, and then if you are looking forward to trade synthetic indices with us, alright, for free this month, all you have to do, use the link in the description of this video, register, get your account, fund it, and we will trade together. So this is what I'm anticipating on Vetexx. Alright, and don't forget to like and subscribe to this channel if you are getting values. Alright, the only time we are not going to be interested in this Vetexx anymore is if this price is trying to consolidate. Maybe it took out this structural liquidity, but then it's returned back and then break this high. If it comes here, we are still going to take it. But if it doesn't, if it break it down here, then that means the structure has been eliminated. So we wouldn't risk our capital on trade like that. And the other one that we're anticipating is V25 index. V25 index still has tapped the point of interest. So let's check something out real quick on V25 index. So these are the two pairs we are anticipating currently. Okay, like I said, V25 has 3 points of interest. So if it doesn't hold at this point of interest, we have a point of interest down below here. Okay, and if it doesn't hold this one, that means we are going to be waiting for the daily time frame point of interest. But definitely one of these two is going to actually hold. Okay, so that is all. So be on the lookout on 25 one index, I'm doing a lookout on 10 V10s. Okay, trying to look at on V10s and also one index, 10 index. All right. So we've come to the end of our today's section, which is always start from 6 a.m. to 7 a.m. So if you watch this video to the end, you got value. Don't forget to like, don't forget to subscribe, and don't forget to share. And most importantly, join our Telegram community and engage there whenever we post updates. And we always follow up with trade and psychological tips. All right. So see you same time tomorrow, 6 a.m. to 7 a.m. I'll see you on the other side.